Alright guys, this one's going to be relatively quick, I believe. So today I want to talk about the three positions that I purchased in January of 2019. And I actually wanted to log into my Fidelity account, but unfortunately it's asking me to verify utilizing my US telephone. Now, of course, you guys know I'm recording these videos from Trinidad and Tobago. I'm currently out on assignment. And so that would require me to use international calling or international text and turn my phone on, which will cost $10 a day. So I generally just keep the phone on airplane mode. So I will have to wait until I have to do something else to be able to do that. So quick rundown of the portfolio. If you guys watched yesterday's video, or actually 2 days video, because I'll be releasing this today, it hasn't changed. We're at around $402,000. We're about to start the markets up here in about 10 hours or so. But that being said, won't go too much into detail about what this aspect of the portfolio is looking like. I mostly would just want to get into the three positions that I purchased. One was actually in my individual brokerage account. It's an addition of capital to an existing position. Another one is a speculative play, and you'll have to wait until the very end of the video to watch that one. Something I generally don't do is invest in speculative plays. You guys know generally I'm a dividend investor. So that being said, this one doesn't pay a dividend. This one is strictly for speculation, because it was less than 0.5% of the portfolio, and I need to start adding a little bit more risk to the portfolio as a whole. So we'll see how that actually ends up going. And then the third position was in my Roth IRA. Actually, the speculative play and this one I'm about to mention are in my Roth IRA. The $6,000 that I contributed in the first couple weeks of January. So that being said, the third position is a chemical company, and it kind of goes into that aspect of things and materials. Currently, or previously, my previous materials position was limited strictly to BHP, and so that hopefully helps as well with respect to getting additional companies within the materials sector. So you can see, if you want to, that we've increased the actual portion of the portfolio to over $10,000, almost $11,000 in materials. Industrials has come up a decent bit. It's over $20,000 at the moment, but this is partially dragged down in terms of income, just based off the fact that the most recent position that I just invested in, which we'll talk about a little bit later, does not pay a dividend, even though it is an industrial stock. And then the third one is a financial stock, and so you guys know that I generally have a decent amount in financials, but this offer was too good to pass up. So we'll talk about that, and you guys probably already can tell if you're being very diligent and looking at what the tabs that are open on here are, what companies they already are. So let's just go ahead and jump right into those sort of positions. Earlier this month, Wells Fargo reported earnings. I think it was either last week or 2 weeks ago, and they didn't necessarily do too hot, because we'll get into it a little bit more in a second in terms of an article. But they basically took a expense that they were going to incur and moved it into the earnings. So they basically just said, hey, we made about $4.4 billion, but we want to take a expense charge associated with some of the fees that we're going to reserve in our back pockets for some of this litigation expenses. And so if you look through the Q4 earnings report, it shows that, but the company still is extremely profitable. I mean, even in this lower interest market that we have here at the moment, they were still able to pull in over 4.4 billion or so before this expense, and in the past couple months they were pulling in $5-6 billion as well. And so I also want to touch in a minute or so the repurchases and the dividends that are coming from the company, because they're actually pretty extravagant. So here you can see purchased about 30 shares when I dipped into below the 50s, which is just above my current cost basis. Now it's kind of sitting at the $47 or so range, and I still think it's a phenomenal buy here. But I put in about $1,500 into the company. The dividend every year is about $2.04. So you multiply that together, $2.04 times the 30 shares, we're going to be getting another $60 or so in terms of dividends. And that yield, based off of the $1,500 that I invested, is just over 4%. And adding that to the total amount of shares that I had, which was currently sitting at 221 shares, now it is 251 shares, or almost 252 shares, because of the dividends that have been reinvested, and almost $500 a year in annual income. So it's almost $40 a month in terms of that. So it should be enough to give me around 120, $121 or so every time I get a dividend. Now, of course, I reinvest this automatically into back into Wells Fargo. So this is good enough at the moment to get me about 2.5 to almost 3 shares. And so I'm comfortable with that. I mean, that, just think about that. I mean, every single quarter, it's going to be able to get me at least 2 shares, and each share gives you about $2 in terms of income. So we're looking at, just from reinvesting the dividends, an additional $4 to $5 a year in terms of additional income every single quarter. So if you were to kind of roll that out for 4 quarters, you're looking at close to $20 a year just in dividend reinvestment. And that's before you even get into increasing the dividend as well. So cool with respect to that. Now, actually getting into some of the more cooler bits of this, and we could actually go into the cash flow statements and stuff if you wanted to, but I think that this article on Seeking Alpha by, I think his name is Value Portfolio, which was really good. Talks a little bit about, yes, okay, there's the account scandal, and that's why some of this litigation costs are coming into play here. But I think this slide is very telling with respect to what's actually going on. You can see the run rates anywhere between 5 to 6 billion. Before they started cutting the interest, the Fed started cutting the interest rates, and it started to go down slightly. But that being said, this year or this quarter we're supposed to make around 4.4 billion, but it was cut short, obviously because of the 1.9 billion or so in terms of the litigation costs that they're kind of taking automatically into the back end. So I thought that was very diligent of the company. They didn't have to do that. In fact, they could have easily just hit it into some non-cash item and still gotten the EPS. But I think it was the right thing to do to hit it in the background, in the forefront rather than in the background. So that actually is pretty cool, because if you consider that, it should have been aligned with about 90 cents to $1 in terms of earnings per share. And remember, the company pays out over 50 cents a share or so in terms of dividends. So in that respect, it looks pretty good. But I think that one thing that I wanted to show here is just the comparison between 2018 and 2019, because these were the Q4 earnings. We now have all of 2019's earnings, so we can compare everything on a like-for-like basis, comparing it to 2018. Now, the thing I want to highlight most is the graphic in the lower right-hand corner. And so if you guys remember, the price of Wells Fargo really hasn't moved all too much over the past, I guess, year or so, and it's kind of hung out in between the $45 to $55 range, and that's kind of where I wanted it to kind of be. And more recently, it's kind of started trending down, and then of course it took a larger hit of about 4 or 5% when these earnings reports kind of came out, now pushing it back down to the lower price range of the past year, year and a half. And so the thing I want to highlight most is, keep in mind that Wells Fargo does a phenomenal job of repurchasing stock. I think within the past year, they purchased over $20 billion worth of stock. And keep in mind, this company is worth about $200 billion. So that being said, this graphic is like for like. I mean, it's a 10% decrease in the shares outstanding. So what does that mean? I mean, that means that the company no longer has to basically pay out over $1 billion worth of dividends every single year, so they're saving themselves in that respect. But it also means that your earnings per share on a like-for-like basis should go up about 10%. Now, of course, we didn't see that because of the other things that offset that increase in the earnings per share, like the fact that you had the litigation costs, and you also had the Fed interest rate taking an impact, which eventually has to take a couple quarters to work through savings accounts and checking accounts and things of the like. So that being said, you don't see that immediately, but what I would like to say is 2018, the price was also very similarly at $48 to $55. Here now you have 10% less shares, and you're back in the price range of $48 or so. And so the company's not going anywhere. That being said, and the earnings are extremely strong. You still have $4 billion, $4.5 billion in terms of quarterly interest and quarterly earnings. And so that being said, it's about $18 billion worth. And so if you kind of go back to the Yahoo Finance aspect of things for Wells Fargo, we won't really go into the financials and the actual cash flow statements and stuff like that. But I think it's very important to see that the market capitalization of the company is less than $200 billion at this point. And if you were to keep up the $4 to $5 billion a quarter sort of range, I mean, you're looking at a $200 billion company that makes $16 billion every single year. Or if you think it's going to make $5 billion, you're talking about $20 billion in terms of net income, and the market capitalization of the organization is less than $200 billion. So you're looking at a price to earnings of way less than 10. Now, of course, this lags a little bit behind. It also incorporates the most recent quarter, which is why it might be slightly inflated at the almost 12 price to earnings ratio. But if you think about this in terms of non-interest related charges or non-cash related charges, or these litigation effects in the long-term aspect of things, when things kind of get evened out, this comparatively to the rest of the market, considering you're potentially paying 25 times earnings for either Apple, Microsoft, Google, things of the like, and this pays about a 4% dividend, it's potentially a good position to initiate if you haven't already. So I personally like Wells Fargo, purchased another 30 shares, have almost 250 shares of it, giving me about $500 a year in cash flow. So I'm a personal fan of it, and I'll continue to buy when the price is right. And actually, maybe the price is currently right, but I am very heavy in financials at the moment. I don't know how to pronounce this company. I just call it LYB, but Basel Industries. It's a chemical company, and I really like this kind of company. I was doing some due diligence, looking at the cash flow statements, and it's a new position. It's something that I hadn't purchased before. It's in the Roth IRA. It sits in materials sector, and so this is something that I was utilizing to kind of up my materials sector's position, which at the moment kind of stood strictly at BHP and BHP only. So I had about the $6 to $7,000 in BHP, but I didn't have anything else in materials. And so chemicals are extremely important. The company makes some pretty cool stuff, and so kind of just wanted to run through it as well. It's an $85 stock at the moment, and purchased it about. So I bought it at 91. So I'm currently down a decent bit on it, but that's not a bad thing. I'm going to be reinvesting dividends, and in fact, I could be reinvesting other companies' dividends on my Roth IRA into it as well. So no problem with this. I don't. No, this doesn't upset me one bit in terms of the earnings aspect of things. It's very underpriced with respect to where it is. I think when I purchased it, the PE was less than 10. Now it's under 9. So nothing wrong associated with that. Pretty consistent earnings per share as well. And so the return on capital for the company was relatively good. I was doing some calculations looking at the balance sheet and the income statement, and it's above 15%. And so it did look like the company was taking out a little bit of debt over the past couple of years, if I was reading the balance sheet correctly. So it looked like the company was somewhat leveraging up themselves, but it didn't look too out of hand. And of course, it's paying about a 5% dividend yield. So I think when I purchased it, it was about 4.6% that I was paying for the yield and the money that I was getting. But long term, I think this is a good hold, good steady investor, or good steady dividend payments that I can utilize in the future. And yeah, nothing too extravagant about this particular company, other than I wanted to diversify a little bit out of materials and not specifically utilize BHP. And so the company also, I guess, is something that I can show you guys, has a very good history of raising dividends. So over the past, I guess, 6 or 7 years or so, dating back to 2013, the company paid out 50 cents every single quarter. Now we're looking at about $1.05. And it looks like within the next 1 or 2 dividend payments, we should be getting an additional raised out of the company, and keeping in mind that it pays about $4.20 every single year in dividends, but the company is yielding over $9 a share in terms of earnings. So that being said, it has a pretty decent payout ratio at the moment, and could definitely stand to continue to raise the dividend if that's the case, slowly but surely. You can see that it also paid a special dividend of about $15 earlier in the year. I'm not exactly too sure what that was all about. Probably something to do with divesting a company, and or selling off a piece of a company, or maybe they just had a bunch of cash on hand. It's probably something I should probably look into a little bit, but I was kind of enticed by the compounded annual growth rate on the dividend increasing over 100% over the past 6 years or so. So, that being said, relatively cool, and wanted to kind of get involved and diversify in the materials sector. So, there's that aspect of things. Now, getting to the speculative stock, some of you guys probably have already seen in the tabs above, but it's Virgin Galactic. I purchased 100 shares or so in my Roth IRA, and some of you guys might say, "Wow, you paid 15.50." But that being said, at the $15.50 price tag, it was only a $3 billion stock, and so I think what ends up happening here is, the cool thing about Virgin Galactic is it doesn't pay a dividend or anything like that. It's a spec stock, like I was kind of mentioning, but the actual company itself, um, is looking at a piece of the market that I think can, travel market that I think is a little bit different compared to what, say, Tesla is looking at, or the Boring Company, or SpaceX is looking at. And so, that being said, I wanted to utilize it as something that is a little bit different, and could potentially be something that is pretty big. And the reason why I think it's a little bit different, comparing itself to, say, SpaceX, or to comparing itself to other commercial, I guess, airline companies, is at the moment the company is looking at strictly just getting people into space. So $250,000 per person. They take you into space for quite a few minutes or so, and then they kind of bring you back down to Earth. And now, of course, $250,000, there's not a very long list of people willing to do that. There's about 600 or maybe 1,000 people that currently have the money and have actually signed up for it. And actually, Simon's, or signing up is currently closed, and I think they might open it up once they actually start, um, actually doing things later on this year, or maybe early next year. But I think the other aspect of things is if you continue space travel, that means you can travel a lot faster once you're actually in space. Now, that being said, being in space and space travel isn't something that is anything new. I mean, you have companies like SpaceX and Boeing and NASA that are sending people into space all the time. But no, the only thing that they generally do when it comes to NASA or SpaceX is they're generally either taking rockets or shuttles specifically going to, say, the space station. Now, the difference with Virgin Galactic is it's trying to get commercial space, travel more to the everyday people. Now, of course, at the moment, what ends up happening is it's strictly just to kind of go up in the air and then kind of come back down just to say you've been in space. But in the long run, say 2025 time frame, they're looking to basically put Virgin Galactic in and actually have commercial space flights that go to other destinations. So think that if you were to, say, go from New York to Beijing, or New York to Hong Kong, or New York to, let's say, Dubai, it's generally speaking a very long flight, and you might end up having to stay in London or anywhere like that, and it could potentially take you a day or even 2 days to get there. I know I've looked at going to Southeast Asia from, say, Houston, where I used to live before, and it's about 40 hours or so to potentially get there, 25 hours at the least, if you are able to time everything perfectly. Now, the benefit of doing this, and what Virgin Galactic wants to do, is shrink the flight time down to about 3 hours. So you'd actually be able to go up in space and be actually able to, take off like a normal plane, go all the way up into space, and then once you're in space, you'd be able to go a lot faster and then come back into space, land like a normal plane would, and you'd be cutting out, generally speaking, the majority of the commercial airline industry. Now, keep in mind, these sort of flights are going to be very expensive when they first come out. However, that being said, through time, just like anything, prices will come down as technology advances and as well as competition heats up in this particular space. But I think that this is very interesting to see because, it kind of fills a niche that can really only be filled by, say, one other company at the moment that I can kind of think of, which is the Boring Company that Elon Musk is running. And so what I mean by that is SpaceX, Blue Origin, those sorts of organizations are all kind of doing commercial space travel for, say, NASA to do actual work associated with space travel and going to Mars and trying to make us an interplanetary species. Now, what Virgin Galactic is really trying to do is commercialize space travel for the common individual or the common citizen that allows them to travel around the world a little bit faster. Now, that being said, there's a gap, obviously, into between, I guess, commercial airlines and space, and this is kind of bridging that gap and allowing us to kind of travel anywhere in the world within about a 3-hour time frame. But the only other organization, obviously, is the Boring Company, which I mentioned, and so the Boring Company is also owned by Elon Musk, and basically the purpose of the Boring Company is not only to just get, I guess, boring into the actual place within, I guess, specific areas. Now, the purpose of the Boring Company isn't necessarily to specifically go exactly anywhere to any point in, let's say, 3 hours within the world. But the thing that you could potentially do is if you were able to cut a direct line from anywhere in the world to another part in the world and do it through boreholes. Basically, if you were to be able to, say, put a borehole in New York and go through the earth and go to anywhere in, say, let's Beijing, Hong Kong, Sydney, that time, due to gravity, were to be able to let you travel that distance within 45 minutes or so. And this is something that we've kind of talked about in the past when I was growing up in school. It's actually kind of interesting, but that being said, it allows you to really go wherever you wanted to. It kind of lets you go anywhere in the world in a certain amount of time, and it's basically only limited by the angle at which you're traveling because obviously there is going to be some friction, and it obviously won't go as fast if you're kind of going at an angle rather than if you were to be going in a straight 100% straight line. So, that being said, I think that this is an interesting topic as well. And you can kind of see the example of what the Boring Company is trying to achieve here with respect to travel. But this is not 100% exactly what I'm talking about. What I'm talking about are trains on, I guess, like very frictionless sort of measure movements. Sorry, very frictionless sort of tracks that are allowing you to go up to extreme speeds of over a couple hundred miles an hour and go in a straight line. So, rather interesting topic, and you know, it also can play into increasing the speed at which people are traveling the Earth, which I think is in competition with Galactic. But I think we're a lot closer to, say, doing this sort of space travel rather than going through directly through the Earth, say directly from New York to Hong Kong or from even, say, LA to Tokyo, because you do have the issue of creating tunnels over the extreme distances, whereas you only need to make one infrastructure piece, which is a plane, which is very mobile and can go in the air. So I think something to keep in mind is, yes, there is potential competition in other industries that can be created to help catch and fill the gap as well, considering we're trying to ever increase the ability for us to cut down on travel time to be able to make things more efficient, not only for shipping, but also for us to go where we want to, when we want to, even for a weekend. But if you think about how awesome this could potentially be, is a lot of people in the US say go to Cancun or go to some of the Caribbean islands because it's only a 2 or 3 hour flight. Imagine now being able to take a 2 or 3 hour flight to go to Hong Kong for the weekend, or say Dubai or Moscow or wherever in the world. Now you can take in a weekend trip because of the fact that you're only going to have to spend 3 hours up in space. Now, keep in mind, it's probably not going to be commercial for somebody like me or you to be traveling like this in, let's say, the next 5 to 10 years. But I'd say it'll probably come down in costs, and I don't necessarily know 100% what Virgin Galactic's thoughts are in terms of costs when that sort of thing happens, or even if they have a plane on order yet to be able to go into space. Obviously, they have this plane that you're seeing here, which helps do the kind of initial space entrance into space, and then you can kind of get your weightlessness and stuff like that before returning back to Earth. But once we get actually into commercial aspect of moving people between different cities, let's say in the 3 hour time span that everyone is talking about, I don't know if that's going to be a 747, 777 refurbished sort of model, or if it's going to be something that looks a little bit more like a shuttle. So hope this video finds you guys great. Hope this video finds you guys well. A little bit interesting, talking about 3 positions that I purchased. Overall, the positions, I guess, ended up yielding me about 3.6% on the $7,600, $7,700 invested. Now, of course, that is dragged down. We had about 4.1%, 4.6% for Wells Fargo and LYB respectively, but that obviously gets offset partially by the investment in Virgin Galactic Holdings. And so just these investments alone get me an additional $275 every single year, and that should be anywhere about $20 to $25 a month in terms of additional cash flow coming from the portfolio. So it gets me ever more increasingly close to the $1,000 mark that I'm hoping to hit within the next few weeks or so. Currently sitting at about $965 a month in cash flow, almost 11,600 or so dollars in terms of annual cash flow. So really cool. Really seeing the portfolio start to pick up, and this number could be changing very drastically soon, but I won't get into that. But appreciate those of you guys that stuck around to the very end of the video. Hope this video finds you guys great. Hope it finds you well, and I will talk to you guys soon. Cheers.